It is great to have your company here on Business Now. Well, despite the best efforts of our crime fighters, banks, real estate, luxury goods, cryptocurrency and casinos continue to be used by criminals to launder money. The Australian Criminal Intelligence Commission says that drug money alone accounts for around $12.4 billion of that. The seeping in of dirty money to otherwise clean businesses has caught the eye also of Brendan Thomas, the Chief Executive of the Anti-Money Laundering and Counter-Terrorism Financing Agency, AUSTRAC. I spoke with him earlier today about the latest risk assessment that AUSTRAC issued today.
Well, these risk assessments really look at the nature and the scale of the risk of counter-terrorism financing and money laundering to Australia. We look at the channels that dirty money is coming into Australia, and we look at the risk by industry sector and money laundering type. And what it gives us is a good indication of the scale of the problem. It gives us an indication of the constant innovation that's happening in the criminal industry. It shows us where we need to focus both our law enforcement efforts and also where particularly our financial partners need to strengthen their money laundering controls. It does really show us the scale of the money laundering problem that we have in Australia. It is quite a considerable problem.
Just try and quantify the scale of that problem, because obviously it's not just a problem for you trying to find it and trying to quell the money laundering. It must also, with the volume of money, be difficult for even the criminals to be able to try and cleanse that money that they've acquired.
Well, if I can give you one example, the largest source of illegal money domestically in Australia is the illicit drugs market. And the drugs market we know is valued at least $12.4 billion every year. So that's $12.4 billion that needs to be washed through the Australian economy every year. It's a significant amount of money. And we see it flowing in all sorts of different ways, through cryptocurrency exchanges, through attempts to still launder money through our big banks and financial institutions, through the growth and the innovation happening in payment platforms. We also see it going overseas through informal value transfer mechanisms, that is offsetting between Australia and other jurisdictions. We're seeing it come up through trade-based money laundering, where people in legitimate businesses are laundering money through over-invoices and fake accounts. We're seeing trusted professional lawyers and accountants help organised criminals establish fake companies and fake invoices to help launder money. It's a constant level of creativity in the criminal world that we're trying to combat, but there's a significant challenge in laundering money in Australia.
So some of the big penalties that you've handed out so far: Westpac $1.3 billion, the Commonwealth Bank $700 million, Crown $450 million. They're significant disincentives to companies and to banks and to casinos not to be involved with anybody who might potentially be money laundering. But the reality is, you say that the demand is still there for sources of money laundering in our community.
That's right. I mean, if you have a look at the large banks, we've imposed some very significant penalties on those banks, and those penalties have significantly changed behaviour. I mean, I can tell you I see it in the work I do every day. Our large financial institutions have invested hundreds of millions of dollars in very sophisticated money laundering schemes, huge amounts of technology and huge workforces trying to identify risk and deal with risk. But the scale of banking in Australia, the scale of its clients, the amount of cash it deals with, its global reach still means that there are people trying to launder money through our major banks every day. So it's a constant fight. Casinos, similarly, we've given significant penalties to Crown. Just recently we had another penalty with Sky City Casino in Adelaide. We've got a current legal case against the Star. And we've seen significant change in that industry as well. I mean, those industries are needing to right-size themselves to make sure they're affordable when they take the dirty money out. But that money is still going into the Australian economy, and criminals are still looking at innovative ways to launder it.
So then you talked earlier about cryptocurrency. To me, that would seem to be, if you can get access to a cryptocurrency and ship money overseas that way, that would seem to be a fairly convenient way to be able to launder money. Is that something, some area where you see growth?
Yeah, it is. It's very convenient. It's fast. It's growing in terms of its technological innovation, and it's global. So we see cryptocurrencies leaving Australia. They leave Australia, go to other less regulated markets, pass through a number of cryptocurrency exchanges and different kinds of cryptocurrencies. Then they might enter back into legitimate finance markets in less regulated countries and then come back into a more regulated finance market like Australia. And because, if you like, following the money, that trail kind of drops off the edge sometimes in those less regulated markets, it's really hard for Australian financial institutions to really trace sometimes the beneficial owners of some of those transactions. And crypto is helping to disguise that. So the more international cooperation we get around regulation in the crypto market, the more international exchanges that we get around how us and our allies are dealing with cryptocurrencies, and the stronger that we can get in terms of our regulation, our control of the cryptocurrency sector, the better it's going to be in terms of stopping those illicit flows of funds. But certainly the growth of crypto and the variability of crypto is a significant risk that we're seeing.
But this report also gives you a chance to talk to traditional business managers and owners and effectively say to them, listen, you've got to understand that the ability to launder money through traditional forms of business, that's alive and kicking right now.
That's right. I mean, in the drug market, cash is still king. I mean, we can talk as much as we like about innovative technologies, but people are still using cash to buy drugs in Australia, and there's still a cash economy for the drug market, and there's still cash being laundered or attempted to be laundered in some very old-fashioned ways. I mean, we still pick up people trying to make large cash deposits in banks, for example. Thankfully, we've got technology now where we pick up those trends pretty quickly, and law enforcement can do something about that. But the volume of illegal money coming into Australia, the lack of controls in some of our industry sectors means that we are still an attractive place for significant transnational organised crime to launder money, particularly in Australian real estate. I see our intelligence reports going out to law enforcement and intelligence bodies every day, and I constantly see real estate in those reports as a place where people are laundering money. We still see and are growing to see luxury goods as a source in which people are transferring value around the place. It's much easier to wear your laundered money than it might be to carry bags of cash around, and that's a challenge for us and a challenge for law enforcement that we see rising in law enforcement activities around global money laundering. So even though we are seeing lots of criminal innovation, some of those old-fashioned methods of laundering money are still strong and still require all of us to be ever vigilant in combating crime in Australia.
Brendan Thomas, many thanks for your time today, and we really appreciate it.
Great to talk to you, Ross.